TJ the Wheel Deal coming at you live with another episode of Wheelers. I'm with Garcia, Bill White, and Ben Pearl. Cash flow golfer extraordinaire. He gave a teaching lesson to someone and they acted like he changed his whole life. How are you guys doing?
Good. How are you doing?
Pretty good.
We're good, man. This is an episode of Wheelers. So let me put the brand up there. And on Wheelers, it's ask us anything where nothing, is that you, baby? Where nothing is out of bounds. And I've gotten one question over and over since we started this segment back up again. So we're going to need an answer to this question starting out. Garcia, what the hell is your first name, Garcia? People keep asking me what your first name is. I'm like, dude, I met him in person. I call him Garcia, and I know Garcia's got to be your last name.
Yeah. So my first name is Daniel. My family, they call me Danny. And honestly, with friends, I kind of just started going with as Garcia, just as a. It just kind of came up just as just decided to start using my last name more like as a. Kind of like as a nickname as well, you know, my friends kind of started calling me that. So it kind of stuck. And from there, I liked it, you know, it kind of stuck. And I think it just kind of goes with the brand, you know? So, but yeah, that's the big reveal.
Right on. What about you, Bill? Got any nicknames?
No.
Just Bill,
really.
Huh?
Yeah. Growing up playing hockey, they used to call me Whitey. But I don't know if that'd be appropriate nowadays.
you might hurt people's feelings, but on this channel, we don't give a shit, Bill. So you're safe here. It's a safe space. What about you? What about you, Ben? Do you have any nicknames, or you're just tall and too white to play basketball, or what did you say on that first show?
Yeah, you know, it's funny. I wasn't always tall, so I was definitely too white to play basketball professionally, but wasn't always tall. Actually, when I was in, I think it was third grade, we did a play and they spelled my name wrong on the little brochure and they added an E, so I was called Bean literally my entire life.
That's awesome. So I'm on vacation mode, guys. I got the Maui gyms on that my wife got me, and I got one of these hats that she got me for this vacation. So anyway, so a lot of people have also asked me how TJ happened and why not JT, because my birth name is Javier. So TJ is simply short for my last name, Tijerina. So it's the T and the J for my last name because our Coach Guerra, would call everybody by their last name in basketball practice. And everybody just had a hard time pronouncing my name, dude. I grew up being Tijerina, Tigerina. I mean, tijeras, which is scissors in Spanish. And it was just this guy, Jay Muñiz, Jose Muñiz was like, can we just call him TJ? And I was like 11, 12 years old in the 7th grade, dude. And it just stuck. My parents call me TJ now. It just stuck. And then my brother, who retired as an E8 in the Marine Corps, they also called him whatever Master Gunnery Sergeant bullshit, whatever the hell title he has now, because it always changed there at the end. But it was always TJ at the end versus Tijerina, because he got tired of them screwing up his name in the Marine Corps as well. So that's how that happened. Anyway, let's get into it, guys. We're going to get into it. Quote of the day is going to be later on. We'll figure out a quote later. I'm unprepared, bottom line. So here we go. What is your bread and butter play that keeps you ringing the cash register consistently? Because when I first got introduced to wheeling, it was the white dude, the German guy. He was one of the first videos that I started watching on YouTube. A dude named Marcus. I think he lives in Austin, German guy. And he would say, you're looking for something systematic, repeatable, and consistent or whatever. He had like a little acronym that he had, like SRC, I think was what it was. Yeah, systematic, repeatable, consistent. So I really gravitated towards the wheel strategy because I was like, man, well, there's a lot of ebbs and flows. There's a lot of ups and downs with with just the stock market in general. And I've just come from a very consistent living in the oil field. So I wanted something that can kind of give me something static coming in, if you will. So let's go with Garcia. What has been your bread and butter since you started selling options? Like, what is the one thing where you're like, dude, I need a win? You know, like, I don't know if you've ever been a degenerate sports gambler like I have. So there's this teaser called the 3-team 10-point teaser. And it's where you get to shave 10 points off of the over under or the spread. And dude, that is my ring the cash register when I need a freaking W, because I'm about to have to make good with the bookie if I don't get this win. You know what I'm saying? So I go to, that's my go-to move. Don't gamble. Please don't do anything. And I'm forget anything that I ever said about sports gambling. But dude, the 10-point teaser, my goodness, dude, I win that one like literally like 98% of the time. I have no idea why I didn't just do that. You know what I mean? But no, that's too easy. Let's pick the hard way. So what's your go-to move, if you will? What's your 10-point teaser in the stock market?
So for me, if you want, I'll share the screen so I can kind of walk through. Do I do the
present
entire screen?
Yeah,
or just do the window.
Well, I mean, it's up to you.
I think from tab. Let's see if it.
There we go.
All right, is it sharing?
Yeah, it's got your account number and password right there. Hold on, let me screenshot it real quick. Okay, go ahead. Did y'all watch the episode where I shared the password and shit to the account? No. Everybody was helping me out in the comments. My goodness. Oh shit! Don't be like DJ. Okay, go ahead.
So for me, it's been the cash, kind of out of the money cash secured. So I've been timing it, I guess, pretty well, and I always seem to have cash secured puts on, mostly on Palantir. And recently, I saw that Nvidia was on a really good dip down to the 115s, and when I saw Nvidia was down at the 115s, I sold some cash secured puts on NVDL.
Mm-hmm.
So NVDL, I sold them at a $60 strike. And for this one, I just sold it a couple days ago, and I'm already up 51% on these cash secured puts. So for me, I always seem to have cash secured puts on as often as I can. I kind of use the RSI and decide whether I'm going to be putting on the put, but mostly it's been on Palantir. But right now, because Palantir has run up so damn much, I don't feel comfortable selling cash secured puts at these elevated levels right before the earnings, and I'm just going to sell some cash secured puts here and see what wait to see where Palantir is at before the earnings, and I might sell a couple more there. But cash secured puts for me have been my bread and butter.
Very cool. And have you calculated a win rate for your cash secured puts? Like, do you keep those types of stats like a baseball player would, if you will?
Honestly, no. I used to do really well with the wheel tracker and keeping track of it, and it was kind of one of those things where once I started falling behind a little bit, I felt like I started falling behind even more on the trades, and I kind of realized, okay, as long as I'm not rolling for a debit and I'm not going to be paying too much of a debit whenever I'm rolling, and if I'm closing them, profitably, I shouldn't be worrying too much about, losing in the long run, and so for me, I've kind of been just playing it by ear, and it's but so far I think the only ones that I lost on was on the marathon cash secured puts back in January. So those cost me a couple grand because I closed them out early. I let fear, kind of, get in the way, and it was a lack of conviction, that kind of caused me to kind of stress out over these cash secured puts that were, now deep in the money. Expiration date was coming, and I really didn't want to get assigned on those shares. So I bought to close early, and that was back in January. So ever since then, it's just been on Palantir, and then just recently on Nvidia during the recent dip. And now that Tesla's been tanking after hours, I might sell some cash secured puts on TSL tomorrow or later on this week.
Very cool. What about you, Ben? I know that I posted earlier on Wheelers. Hopefully you had a chance. That way you could kind of like gather some thoughts as far as this particular question. But what's been your bread and butter so far since you know you're how old are you to selling options in general?
I've been doing it pretty much full on for let's say about 9 months now, maybe 10 months. The first couple of months was a little bit of a learning curve, and I kind of figured out, you know, what I liked as far as my style, and getting in and out of the trades like we've talked about before kind of suited just the way that I like to approach it. You know, I don't have that FOMO gene. Like, it's just not, I don't care if a stock gets called away at 122 and then runs up to 140 the next week. Like, if I made money, I'm happy with it. So for me, the covered call has been, I would say, probably 80% of the premium and profits that I've been making, you know, really since probably middle of December. So the last 7 months or so. I've kind of slowly the last month or two started to adjust that a little more to some cash secured puts. And then after the last time we were talking about doing like the put credit spreads, I kind of started layering into that a little bit more. And then just today, I think you saw my post where I was piggybacking off of yours, doing the longer dated ones. But instead of tying up so much capital with just the cash secured put side, I actually converted it to a spread. That way I'm still getting the premium from it, but, you know, kind of freeing up some of the capital, whether it's to buy back, you know, if I get a 40%, 50% profit, or, you know, if there's just other shares that I want to buy and then sell covered calls on those. So covered calls for me has been the absolute biggest money maker. Like I said, probably 80% of my total profits, which I'd say I probably average in like the $3,200 to $3,600 range the last like 5-6 months.
Wow.
Definitely about 80% of that would be covered calls. And that's probably a good split of just premium to also share appreciation. So for me, that's what's worked. I don't anticipate it changing drastically, but I'm definitely going to be adding in a lot more of the spreads, you know, kind of moving forward.
Very cool. Bill, you've been doing this as long as I have, if not even a little bit longer. A lot of people don't know that about you. What's your bread and butter? What's your go-to? If you need if you could only do this one thing to keep ringing the cash register over and over to maintain, you know, the lifestyle and keep the lights on, if you will, what's your bread and butter move to keep ringing the cash register?
To keep just the constant wins going, I would say put credit spreads. As far as where does the most money come from, it's definitely not from that. But to just have that constant income, because, you know, I'm looking to retire pretty soon. So I need that constant income. That's because I want to be taking some money out of my portfolio as well. And
you say retire soon like you're 70 years old. You sounded so exhausted when you said that. Go ahead. How old are you, Bill? Like mid-40s at best?
I'm going to be 41 in August.
Everybody in the chat instantly just hates you right now. Okay, go ahead.
They didn't see me working 70 to 80 hours a week for years and years, though. So
that's the thing. Nobody sees behind the scenes, right?
Yeah. I'm going to go with put credit spreads. Just easy wins, way out of the kind of the way that you're utilizing them now, way out of the money, not tying up a lot of capital. If it really does go against me, it's to the point where I'm probably going to just want to manage a cash secured put. I'm going to close out the buy side. I'm going to take a win there. But I would say 95% of the put credit spreads that I place never get, you know, they're not at risk at all. So if I just want to bring in, you know, just per trade, $200 to $300 per trade, I'll go with a put credit spread. But that's not where the majority of my money comes from, I would say.
Right. And do you use put credit spreads strictly to stack your individual cash Is that the goal, or is it also because maybe the price isn't that attractive right now? So you're like, let me go sell put credit spread where the price would be attractive, and we can consider really having a conversation about turning this into a cash secured put and being more serious with the position.
It's that, but it's also for me a hedge to the portfolio, because I always intend that, I almost bet against the stock at that point, because if it really does drop that much, I'm going to print a lot of money on the closing out the buy side. So it's important to manage your bankroll so that you do have the collateral available if you're going to do that. But typically, in a weird way, rooting against my credit spreads.
Right. Agreed.
To that last point, though, that's the thing I've noticed, especially this last 2 weeks, just with the insanity that's gone on, obviously within the country and just the massive spikes, is having that buy side on that, cash secured put. Especially for me, I've got a couple that are open right now on TSLL that I had every intention of taking assignment, if it breached that 1250 side on the cash secured put. But I'm going to open it, unless something crazy happens tomorrow, pre-market, I'm going to open it up tomorrow, and all of those buy sides on the puts are going to be up, 100%, 150%, 200%. So if I was already planning on taking assignment of it or, potentially rolling, it just makes the roll easier, or just brings my cost average down to then start selling cover calls on those shares should I take assignment.
And there's nothing, if you really don't want to have all the capital at risk or tied up, let's say, there's nothing stopping you after you've rolled to put on another buy side, but just for paying less premium than you collected in the original one.
So I actually did exactly that this last week with NVIDIA. I had a 120 put on NVIDIA, and we had that day where it just tanked hard, and I sold the buy side of it for I think 180% or whatever it was. And then when it recovered a little bit, which with NVIDIA it could be a matter of minutes later, sometimes it moves so quickly, it recovered to where that put was, I think I turned it into a diagonal, and so I actually went 1 week out and a little bit farther down. So, saved however much, 11,000 or, 10,500 on the capital that got freed up by converting it back into the spread. And then the same thing happened again today. I looked at it, I'm like, oh, okay, well, it's dipping down again. I could close out the buy side one more time and just, rinse and repeat that process.
Yeah, for me, it's just a great hedge on a portfolio in a roundabout way, but you get paid to put on a hedge essentially.
Yeah.
Right. Well, for me, y'all all know what my bread and butter is, right? Give me a thumbs up if you think you know what I'm going to say.
I think I know.
My bread and butter is the backstop trade.
Yep.
It's such a bread and butter that I created terminology that's not even on Google yet. I'm gonna copyright that son of a gun because it's gonna get popular.
Well, can I stop you for 1 second, TJ?
Yeah.
Because I thought the question was if you need a win. Because when I said the most of my money doesn't come from put credit spreads, it comes from this strategy right here. But I was talking about just easy, consistent cash flow.
Sure. No, I get it completely. So, and I know that this is your bread and butter because you light up like a Christmas tree talking about these because I can lock in 20-25% right here, and then if I compound, holy shit, we're at 30-40%, right? The game, and this is exactly why I love these backstop trades. So essentially, in a nutshell, it is selling a long-dated cash secured put. The reason I call it a backstop trade is to use a baseball analogy. Let's say I'm a bit of a wild pitcher and my catcher can't handle my knuckleball or whatever, right? I'm a knuckleball pitcher. It's very hard to catch a knuckleball if you know anything about baseball. But if you have a real big backstop there, it's going to limit where the hell the ball bounces off. So they have these backstops there to help you out. But it also makes it interesting because if it's a wild pitch and there's somebody on third, well, they could potentially steal home if there's a wild pitch, right? So my backstop trade is even if the trade goes a little wild, as long as I keep it within the backstop, if you will, I'm going to be okay. But it's not just a long-dated cash secured put. that does not qualify for TJ the Wheel Deal's backstop trade. It has to be an oversized trade. It's got to be a trade that other wheelers are going to look at and be like, oh my God, that's so irresponsible. I can't believe he's tied up so much money on this position at these levels. That qualifies as a backstop trade. It's a trade that other people aren't willing to do because they're not willing to have what you got. I'm going to say it again for the people in the back of the class. The reason that you're not going to retire at 43, 44 like Bill White, because you weren't willing to do what the hell he did to put himself in that position to retire at 43, 44, 45, whenever that happens for him. If you do what people do, you're going to get what they got. But everybody wants what you got, but they don't want to do what you did. There's a little bit of a disconnect there. So these backstop trades are oversized trades on something that it's like gun to my head. You can't open the portfolio and you have to be okay living with the result, either in the money, out of the money. There's really nothing else, right? Aside from that one time with Open Door where it was at the money. That's the only time that's ever happened on the channel live. So when you sell a cash secured put in the distance, that's an oversized trade because you're trying to lock in a certain percentage, an annual return on your capital that you're allocated for that position. So you feel like I'm going to lock in the win. It's not even going to get contested. But if it does, by all means, everything that I know about the company, the investment thesis is going to have like another 6 months to 18 months to play out by this time. Sign me up. I want the shares because then I can just turn around and sell a long-dated covered call. And now I brought in 25 or 30%. You know, if I tied up $1 million, it's 200,000 to 300,000 on the cash secured put. If I tied up $100,000, it's 20,000, 30,000. And then if I get assigned those shares, I can turn around and sell one long dated covered call and bring another 20, 25, 30%. Now my adjusted cost basis, if it's a $30 stock, is already going to be at like 15 or 16. And to me, it's the easiest way mathematically to position yourself to manufacture the win. And it's two trades. You can learn how to fucking golf. Go hit a bend. You know what I'm saying? Like, it's literally, to me, it's the set it and forget it strategy and ring the fucking cash register, because 9 out of 10 times it's not even going to get contested if you're picking the right underlying. Probably 5 out of 10 times you're going to be able to close this thing early. So you're not going to even be in this trade that long, and you're going to lock in 40, 50%. And now you got a hold of your money again, and you're just compounding it and compounding it. So just to elaborate again, you take a huge chunk of money, oversized position in your portfolio. You sell it in the distance, and it's like, I don't care if the pitch is wild, the backstop's going to help me out. I'm going to be okay. I don't think the guy's going to be able to steal home, if you will. And then you're going to take the premium that you received, and you're going to start selling short dated puts with that premium, because let's just say it's $100,000 and they paid you like 30 for doing the backstop trade. Now you got $30,000 you're going to be able to flip the entire year until you meet the expiration date of your backstop trade. And if you win with that $30,000 over and over and over again, let's say you fetched another $5,000 to $10,000 throughout the year, you add that to the $30,000 or so, because that's what I'm looking for. I'm looking for a 30% annualized rate of return, cash on cash return. That is my game. That's my marker, if you will, on a backstop trade. Now I look up, and if that backstop trade worked out, holy shit, I just made a 40% return on that portion of the capital. So now the question becomes, it's a fair question, why don't you just do that with all of the portfolio? Because that's the question that I ask myself every single night. Like, why don't I just lock everything up a year from now and get myself that 30% up front, and then I'm just working, nickel and diming my way, and then seeing how it all plays out, if you will. That is something that I consider a lot, guys. So I'm going to walk y'all through a cash secured put in the distance, my backstop trades that have gone for me, and I want you guys to see the reason that they qualify as a backstop trade is you got to see the sizing of these things. 200 contracts.
Hey, TJ, TJ, can I add on to the backstop trade?
Sure.
Just a little tweak. Now, it's not going to work if you're with Robinhood, but one of the reasons why I have most of my money in Schwab is because I can put all of my money in a money fund and collect 5 to 5.5% interest. And when I sell a long dated backstop trade, like you're saying, I'm still collecting that interest. So I'm also compounding on that. And then another just slight caveat, I'm not, you kind of do it in a roundabout way, but on the short dated puts. So I'll also, when I do the long dated put, I'll put that money in the money fund as well. And then I sell short dated puts with that. And when I actually get money from those short dated puts and I accumulate those wins, then I buy shares with that. So the only shares that I own, and I own a good amount of shares, but it's only with money that's from, compounding on top of compounding.
Right.
Then you can start selling covered calls after that. So it's just a little caveat where we pretty much do the same thing, but I kind of try to add that interest in there as well.
But like you and Mr. Premium and the option and a handful of you guys are doing y'all are with Chuck. And I think Fidelity does the same thing, right? Paying you money on cash secured puts or on cash secured put collateral. Obviously, Robinhood does not do that. So that's the caveat. And we just got out. We just had a real big fight with Charles Schwab. So I'm not going to talk shit about him. But the bottom line is they're not our broker anymore because it was just it was tough. It was a very, very tough conversation. 3 months of fighting with these fucking guys to get them to allow us to do what we do. And we just couldn't make it happen. But it's a great brokerage. It just didn't work out for our needs, right? Like, so I don't want to say anything bad because I want them to sue me, to be honest with you, because I could go on a fucking rant right now. But it's not worth it to me. I'm glad that it works for you. You know what I mean? I know that it works really well for Mr. Premium, the option. We're not talking about small money here either, guys. I mean, the amount of money, like say it's $1 million. What's the interest on that per year for doing shit, Bill? It's a lot of money, right?
50 grand.
Exactly.
Even more. Yeah.
Talking about paying your mortgage in most cases for the whole year. I mean, so it's a shitload of money that we're leaving on the table, but we just couldn't get the right situation with fucking Chuck. So it is what it is. Anyway, back on the talk here. So I want y'all to just see contracts. 200 contracts to 750. Clean Spark. December the 21st, 2023. So first, we're going to go to actual Clean Spark. And we're going to go to that date and see where it was at. So let's see where the mindset was. I'm going to walk y'all through this thing, okay? So this was, we're going to put it on the 5-year chart. And it was December the what? Help me out. December the something?
Like 23rd, I think.
Yeah, so it was like way over here, right? Something like that? Right here? Give or take?
Yeah.
It's like right in here? So it was at 11.50 to $12, give or take, somewhere here, right? So I said, hey, I'm willing to buy Clean Spark at $7.50 on or before January of 2025. So we're not even there yet. You know what I mean? We're not even there yet. So now I'm going to go over here, and hopefully I'll be able to go back this way. Yeah, so December the 21st, 2023, I was like, hey, over a year from now, I'm willing to buy these shares, these shares for $7.50. So help me out with some calculations, guys, or do y'all want me to whip out the trusty rusty calculator? Who can help me out with the math? So it's
like
$750 times 200. That's the collateral, right? I might be able to do it another way, make it easier.
150K.
You got it?
$750 times 200.
Right.
150,000.
Let me do this. Hold on. I could do this a lot easier for us. The wheel tracker's got these trades.
Yeah.
You
have multiple too.
Yeah. Yeah. So let me go to CleanSpark. There's not a lot of activity here. So on row 12, you guys able to see that, or did I make it a little bit bigger? Can you guys see that? Is that better? Are you guys able to see that pretty easily?
Yeah, I can see it.
So on December the 21st, I entered into this cash secured put 200 contracts. Y'all just saw it on the actual portfolio. So y'all know the wheel tracker's legit. So essentially we tied up whatever that collateral is. That's a problem. It doesn't tell you the collateral anymore because we're not doing it. We're not in it anymore. But essentially we got $45,000. We got 52. We got 52. We got 60. We got 60. We got 60, 60, 30. And then 97. That's how much premium we received up front. And it was 1,500 contracts. Let me do it this way. So you guys will see it 200, 200, 200, 600, 800, 1,000, 1,200, 1,400, 1,500. And then this is when I did it again, but it was 1,500 contracts. So now we're going to go back over here to this guy. And you're going to see we got 45, we got 52, 52, 60, 60, 60, 60, and 30. And then I started closing them back. But here we're going to stop right here. We're going to take out this calculator. So we're going to go over here, and it was $750 times 1,500 contracts. So it was a $1.125 million bet on CleanSpark at 750. Would that be considered an irresponsible trade? Would that be considered, holy shit, that's lopsided, that's crazy, that's poor money management? This is the kind of trade that gets everybody talking shit about you, and that's why they're never going to have the results that I have. Does it meet those parameters? If somebody sees you place this trade and you post it on your X or your social media, and they see you tie up 1,500 contracts at 750, they're going to think you're a fucking idiot for the most part. Yes or no? I mean, seriously, calling a spade a spade. It's an oversized risk, right? It's not good money management. Fair enough. It's not going to meet your little, no more than 2.5% per position, definitely no more than 5%, and all this other bullshit that all these broke dicks say on YouTube. Yes or no?
Yep.
This is not meeting those qualifications. I'm not here talking shit. I'm just telling you how it is, bro. I got the receipt. That's just the reality. This is the type of trade that a lot of people are not going to be willing to participate in. That is a backstop trade. So you gotta do homework, man. Like, this doesn't just pick any underlying that pays a shitload of premium. Notice the ticker's not GameStop. It's not, it's not something that we're YOLOing AMC or anything like that. This is me really feeling like Bitcoin's going to go on a run after this halving, and researching all of the miners and feeling like CleanSpark was the best in class. And I was willing to put my money where the research was. Does that make sense? This wasn't just a crazy ass gamble bet on black. So we got all of this collateral tied up. We got a shitload of premium. And then what happened to CleanSpark? What happened to CleanSpark a few months ago? Like January, February, March.
Rocket.
It went up big time, right? It went up to like 17, 18 bucks or something. Might have been the high, something along those lines, right? So I looked up, and then all of a sudden it was like, holy moly, look at the amount collected, right? 260, 225. This is per share. 301, yep. 304. And then how long later? February the 26th. So how long were we actually in this trade? We started December the 21st. We started scaling into this thing, right? Initially, it went against us. because you notice how we picked up 45,000 and then we picked up 52,000 because the trade was going against us. So we were averaging down. We were scaling into the trade. And then I was like, dude, it's even getting better over here. They're paying 60. And this is when I went real heavy. And then we finally got the position as big as I was willing to make it. And then I look up about a month and a half later, give or take a couple of days. And I was like, holy moly, dude, I could close these out and give back $1.50 of this money. And I was able to do it 500 times over, 400 times over, 500 times over, and 100 times over. And that's your 1,500 contracts that we sold over here. So we locked in about a 50% win, give or take a few dollars in about approximately 45 to 60 days. Then I did it again at a much smaller scale this time because CleanSpark came back down. And I was like, well, let's do it again. But now they were only paying $1.95. Over here, they were paying, $2.25, $2.60, and then $3 and so on and so forth. But I was like, well, I've already got this big safety net because we won the initial trades. So now I did 200, 200, and 100. So did another 500 contracts right at that 195 level. And then I bought the closed in for 180. So picked up a little bit of money, 15 cents or $15 a contract times 500. So it wasn't great, but it was better than losing. And I haven't touched it ever since because CleanSpark just didn't go back down to levels that I was comfortable based on the research that I had done, because I kept researching Riot and Marathon the whole time. Those are the only three miners that I've researched. And I concluded that Riot had the money to expand the largest. And they were going to have the money to acquire other miners. And I think they actually announced the acquisition of another miner today. So the investment thesis is playing out for me based on the research that I was doing way back in the day. And this is like 2.5, 3 years of research. This isn't like, oh, let me just read a few articles and watch a couple of YouTube videos. Like I was really digging into this thing, feet on the ground, checking out the facilities for myself, etc. Right? So I transitioned the bet over to Riot, and then Riot's been printing money ever since. So that is my bread and butter trade, guys. It's the backstop trade, because then you take all of the premiums and then you're selling short dated cash secured puts. And if you're doing pretty good there, you look up, a year later and you're like, oh my God, I'm getting 30, 40% annualized returns on that portion of the capital. And that's how the portfolios have been able to scale up very, very quickly. It's because of the backstop trade. And I've got a few of them on right now because, again, it's like, well, why don't I just do that over and over, right? So I have some that I did, but not real big. But like I did Riot a couple months ago maybe, and I did it at $10. So this one's a little bit riskier. I did it on 3/26, so about 3 months ago or so, give or take 4 months ago. And it paid a cool $59,000. What is that rate of return there, Bill? Because that's tying up 200 grand, and it pays you $59,000 for roughly 9 months. What kind of return is that on your capital?
What was it, 200 grand?
Yeah, 200 grand, and it paid 59 and some change up front. Paid 59,200.
So it's just under a 30% return, but then annualized it would be
Probably closer to 40.
Yeah, like 40, 45 probably.
So that is why I like the backstop trades, because now I got $59,000 up front that I can turn around and sell short dated cash secured puts on and nickel and dime my way to probably a 50% return on that portion of the capital if things go my way. And I started proving that theory a little bit, because after that backstop trade, what I did is I was like, well, let me take that money and add more to it, and let me keep selling short dated cash secured puts on it so that I can really analyze the wheel tracker down the road.
So you're able to sell cash secured puts with the money that you received from the backstop trade.
Correct. And I added more to it as well. So you guys are going to see that I don't know what I was doing here. I was closing out something from back in the day, but this is where I did March the 26th. I got the 59.2.
39.5%, TJ.
I'm sorry?
39.5.
Yeah. It's pretty good, right? How many of you guys would take 39.5% return in 9 months?
Yep.
So the people that call me an idiot for doing these crazy trades, I just don't think they understand basic arithmetic. Because let's do the math. What's my break even on that trade? We're talking about I agreed to buy Riot at $10, right? They paid $296. You subtract the $296 from the 10. What is that? Where I went to school, it feels like about $704.
So that, TJ, I think that's one of the biggest things that I think people don't look at this. We did that one episode talking about like intrinsic and extrinsic value. I think this is one thing that most people don't understand with that is that even though you're selling the put at, whether it's the $750 on the Clean Spark or the $10 on the Riot, that break even being, what would you say was, so 704. So a 30% decline on the stock price from where you were at, anything on a 20 or 25% decline, it's still not at the value where that's going to make sense for someone to exercise. So from your side of it, you're looking at it going, okay, I'm fine. There's time on the contract. There's still extrinsic value and intrinsic value that whichever side you're on plays into your favor. And I think that's the biggest thing is people just don't get that. They don't understand it.
Dude, Riot would have to drop to like $5 or $6 in order for these shares to get put on me prematurely. Because they're just not good enough for the other person. That's why I don't understand how these get filled mathematically. Bill, maybe you could help me out. Because every time I get a backstop trade filled, it surprises me a little bit at how fast it happens. Because I often wonder, maybe I could have gotten more money. And that's how you'll see 200, 200, 200. Because I was like, I didn't realize that there was that many fish out there. You know what I mean? Like I thought the game warden was onto this game by now. So it really ceases to amaze me that these things can get filled with such high regularity. So go ahead.
When you're setting those up, TJ, are you looking at a particular delta or are you just looking at a share price of, okay, I would totally buy these at this price regardless of the delta?
Yeah, so it's a combination of those things, Ben. Good question. I'm looking at, gun to my head, a year from now, everything that I feel like I know about Riot, even though they're going to dilute and everything else, but I know why they're diluting. I'm confident that I know why they are diluting because they're trying to become, without a doubt, in their mind, the largest Bitcoin miner around by far. Like their goal is to be twice as big as the next guy. That's stuff that they don't advertise, but it's stuff that I've learned from doing my research. And I'm like, their positioning and things are what they do. Then they become like a 15% stakeholder in Bitfarms, kind of forcing Bitfarms' hand a little bit, being a little bit dickish, if you will. And then now they acquired somebody else. I don't even know who it was. I got something on Yahoo. I hadn't had a chance to read it. So the investment thesis is really starting to play out for me a little bit. So what I did is I was like, okay, cool. I'm going to allocate more money, but instead of just doing all the backstop trades, let's pretend maybe I'm going to be wrong. And let me see if I can stack some W's along the way. And that's what I started doing. I started selling 200 short dated cash secured puts from April the 2nd to the 12th, picked up 7,400. 8 days later, I gave back 5,400, so I locked in a little bit of a win there, and I was out of harm's way. And then on April the 10th, because Riot started tanking, not worried about my backstop trade. That one's going to play out how it's going to play out. Let me play here on the here and now. So I did 200 cash secured puts, and I brought in 6,200. And then I had to roll those cash secured puts, so I brought in another 6,800. And then I bought to close covered calls that I had in the distance, gave back 30 grand, because I wanted to bring in some cash flow on those covered calls, which didn't end up working out for me. We'll see here in a second. And then I started selling covered calls on these. So I brought in 6,000 there, rolled those covered calls, got in 11,000. And then I bought to close these puts over here, 7,000. So 200 contracts. I had picked up, the 6,200, rolled, got 6,800. And then I eventually closed those out and I gave back 7,000. Then I started selling more puts. I got 2,500. Then Riot tanked some more and I sold 200 puts at 5,800. And then I sold more puts, got 2,900. Then I bought to close those puts, gave back 800. So I was realizing some wins along the way. That way it could be concrete, because I want to really be able to dissect this, 6, 9 months, 12 months from now, to really see how I did with this portion of capital that I allocated to this Riot trade, because this essentially has become my bread and butter trade for the year. And I just kept doing it over and over and over again. And that's how I execute the backstop trades.
And I started looking and I started looking at Palantir, like what a backstop trade on Palantir would look like. And I'm looking at back when it was tanking in the low 20s, that in my mind, that was, I already knew ahead. Like, it's just, I knew that was going to be somewhere along 19 to 21 was going to be that floor, that support level for Palantir. And I would be buying hand over fist if it went below 20. I had already depleted a lot of my cash buying on the way down. And I'm looking back at a $20 put out to January 2026. Back at the lowest point, it was paying $5 a contract. That's 25% of the contract paid up front. And right now, as of today, that contract is up 50%. So it's $2.50 to close now. So to agree to buy Palantir at $20 January 2026, I would have been able to close it today at a 50% win.
Yeah.
Like Garcia.
Yeah.
So that Palantir is one of my backstop trades. But when
$24, right?
25. So when it dropped down, what you're saying, when it dropped down to 20, I did both January of 2025 and 2026 at $25. I did it in the money.
Wow. And what percent are you up now, or do you still have it open?
I still have the 2026 ones open, and they're about I want to say 40% up.
Dang. Do you have a target, like when you're going to be exiting and redeploying, or just leaving it?
I think around the end of the year, I'll probably, if Palantir goes on a run, it'll probably be up around 60-65%. I think I saw. And I'd look to redeploy it into a different type of backstop trade at that point.
Yeah, because I mean,
if you're my point is I just understand how bullish you are on Palantir. Yeah. When you have an extreme conviction, you don't always have to worry about going that low. If you go out in the future and you really believe Palantir is going to be more than $25 in January of 2026, I mean, are you really risking anything at that point?
No.
I don't know.
No, the thesis would have to completely, like the fundamentals would have to break down. And I've yet to see a single sign of, I've yet to see anything that would shake my conviction. And
that's the best part is when you have extreme conviction in a stock, you can really maximize a backstop trade.
And I think that is the big key, guys, is I was hoping that the conversation was going to get there. The backstop trade is all about conviction, capital, and courage. You need the courage of your conviction, and you need the capital, and you need to be able to exercise this arm folding technique. Mr. Premium used to be one of the original wheelers on the channel. And you need to be able to look at the trade and let theta do its thing for you. And the reason I love the backstop trade so much is because I'm tying up such a big portion of my capital that it prohibits me from doing anything stupid with it in the short term. It's my $10 10-point teaser bets that I win so often. So I take a stock that I feel like, dude, I don't have a crystal ball, but I've got enough information at my disposal right here, right now. It's available to me. It's accessible. If I'm willing to access it. What is a price target that I'm comfortable taking ownership of these shares if shit just doesn't go my way? So that's the first thing that I need to figure out. And then I'm like, okay, is the juice worth the squeeze? So give me a couple of stocks, and let's look to see if a backstop trade were to make sense. And then it'd be like, okay, well, how much of the portfolio do I no longer want to jack with? Because it's already going to pay me my 30 or 40% up front. Like, there's nothing wrong with doing less and making more. That's the quote of the day. I just stumbled on it. I think that we have this mindset, this tweak that needs to happen is people have been conditioned from a very young age that you have to work hard for money, and it's a very active thing. You got to work hard. You got to be doing stuff. When I first got into this thing, I felt like the more buttons that I push, the more money I could make. Yep. And the backstop trade has showed me that you could make a lot more doing a lot less. Go enjoy life. Learn how to golf. Spend time with your family. Raise your kids. Drive them to fucking school. You have time to do all of that because you already got paid all your money up front because you've already decided that, hey, I can live with this result. Like, to me, the essence of a backstop trade, if they're going to pay me in this case $59,000, is it can also be money that I could just extract from the portfolio and live off of. And I feel like my principal is still going to be intact when it's all said and done. If I'm a little bit under, I'll just sell cover calls and go get the money that I'm down. So the backstop trade has to meet all of those parameters for me, because one day I feel like that's the only thing that I'm going to do. I have this dream that I'm going to grow the channel like 100,000, and I'm going to like check in with you guys once a month. Let's just see how the backstop trades are doing, because I'm out there living my best life. And that's it, because that's where the money is. That's the easiest money in the world. And that's the American way, right? Make the most amount of money for the least amount of work. Another quote of the day for you. Bill's doing that all the time. I see him. He's able to watch YouTube, living his best life with his job over there. I don't know how the hell you pulled that off, Bill. It's awesome. Congratulations, right? I'm saying it's hard to do. So give me a ticker and let's see if it presents an opportunity for a backstop trade. We can use that as the teaching segment of the channel for Wheelers today. Because I think when you see it in action and you see it play out, we start doing the percentages and stuff. I'm hoping that a couple of the people in the chat, you guys included, I know, Bill, you're all in on these things.
I think Robinhood is actually
a little bit of an aha moment. I want you to have a little bit of an aha moment. Like, I could be doing less and making more on my favorite ticker, because that's what the backstop trade means to me. So give me a ticker, anybody, in the chat as well. You guys can participate.
I've been waiting for Robinhood on that one.
I'm sorry?
Go ahead, Bill.
He said Robinhood. I said SoFi.
So I'm going to go with SoFi just because I think SoFi is more attractively priced. And I think that it's held these levels. What was the Bulls and the Bears always talks about historical support. I think that that SoFi has historical support in this $7 range. And it also presents a very unique opportunity, because a very lucrative backstop trade is when you actually sell a cash secured put slightly in the money as well. Because then it's like now you're indirectly playing a little bit to the upside as well. So you're grabbing more premium. You're taking on a little bit more risk, but you're getting more premium as well. So let's do an example on SoFi and see what that looks like. And I actually already have it pulled up.
January 2026, $10.
So SoFi is trading at $7.39. They're about to announce their third quarter of GAAP profitability next Tuesday, I believe. So it's one of those things, like, gun to your head, a year and a half from now, would you be comfortable taking ownership of SoFi shares in the $8 range, in the $7.50 range, in the $7 range, or if you want to be real conservative, in the $6.50 range or in the $6 range? Obviously, the lower your strike price, the lower your return. That stands to reason. Fair enough? So let's run the numbers, guys. And what dates are you looking for for a backstop trade. If I was going to really be looking at this as a brand new backstop trade, forget about the fact that I already got a bunch of them over there at January of 2025, because you're going to see there 500 of them at 8 and 700 of them at 7. So you can see that I believe in this concept. And right now they are paying $144 or $1.44 per share if you're willing to do it at $8. So that's in the money, right? So you're talking about, you're going to subtract $1.44 from 8. That's going to put you at 640, 656, I think, is a break even. So 7 months from now, do you think that SoFi would be above your break even? Forget about the strike price. I always ask myself, do you think that it's going to be above your break even? Because if it's above your break even, it's a profitable trade. Psychologically, you might be having a hard time, but mathematically, it's a profitable trade. Like, people don't put enough emphasis on the break even. They just look at their strike price and, oh my God, it's in the money. Did you just forget about all the money they paid you to get into this trade? I mean, what did you do with the money? You know what I mean? If you extract it from the account, you got issues, right? You got something to really consider and worry about. But if it's in your portfolio, you haven't done anything with it, you're good. So let's do the math on that real quickly. If you guys can help me out, or I could do it on the calculator, but just I'm a little bit slow with it. So if you guys can help me out on the math, like how much money is it worth it mathematically to do something here, or does it make more sense doing it, further out in the distance? So let's take the $7 strike price. That way we're not promoting anything silly. We're going out of the money. It's still a 34 delta, so it's a very aggressive trade. The implied volatility is high, but I'm really actually looking for like 70 or 75% of implied volatility whenever I do these, because then it's going to maximize, the amount of money that I'm bringing through the door. I'm looking for massive liquidity. It has that. So it meets all of those parameters. I just feel like this return is going to be a little bit light, because just eyeballing it, if it's $700 in collateral and you're getting 88, that feels like about 12% or so. And
yeah,
it's only a 6-month trade, though. It's only a 6-month trade. So annualizing it, eyeballing it, it's going to be about 22 to 25%, just eyeballing it. So that doesn't really meet the parameters that I'm looking for a backstop trade on SoFi. The only way that it would potentially meet those parameters if I were to be willing to dance over here in the $8 range. That's why I've not added to these trades, because I'm already winning those trades based on the amount of money they paid me when I got into them. So that one doesn't meet the parameters. So give me another ticker that you feel is already at a good price. Like maybe it just hasn't run up for whatever reasons with the market. So you want to give more time to this thesis to play out, and you want to try to lock in a big chunk of money up front.
So TJ, your parameter is 30% minimum.
That is what I'm really looking for. I'll do it at like 25 to 27 because it's a higher quality stock. You're not going to get 30%.
Yeah, I'm 25.
Like PayPal, let's say you're looking at PayPal. PayPal's not going to give you 30% because it's going to be very hard mathematically, because they're buying so much of the float for PayPal to ever trade under $50 a share again, if you know anything about valuations.
We could check out Robinhood, like Ben was saying, and see what it's paying.
I'm good with it. Let's look at old Robin the Hood.
IV on a lot of those is in like the kind of 65 to 68 range.
So Robinhood, to me, a nice round number to take ownership of Robinhood is going to be probably $20. That's me. So that's where I would be looking. So I'd be looking, and then backstop trade for me is at least a year, preferably. So I would be looking over here in this area, right over here, June of 2025. And I would be like, okay, so you're telling me that they're going to give me $350 on 2,000 to tie this money up for a little over a year. Now I got to start doing some math on that. So eyeballing it, it doesn't feel high enough, but we'll see.
So 17%.
That's 17% if you annualize it, but we got to take a month off of that, so it might be a little bit better than that. Or did you already factor in the 332 days of the trade?
No, just a straight.
Right.
Yeah, it's about a year. So it'll go up another 0.5% because it was 17.5. You're talking about 18%. So
yes. So it really wouldn't do it for me.
And one thing I have noticed for the people in the chat too is that one thing that I've been noticing is the bid ask spread gets very thin so far out, and depending on the strike. So I've been just, instead of just picking a strike willy-nilly or wherever it's at, just make sure that the bid ask is the tightest, because it varies, between $20, $25, $30 strike. You can have a $1 spread, and the next one will be a 10-cent spread. And that's where all the liquidity is. So that's probably the strike that you would want to have open instead, where you'll have the buyers and sellers there.
For me, I like Robinhood because I'll probably be doing it more just with, obviously my account's not the $6 million level like TJ says. So I'll be doing mine more on like the put credit spread side of it. So I like the returns on the put credit spread side just because obviously I'm not putting up as much capital.
Right.
The other one that I don't know if it was today or yesterday, TJ, that you were putting it on X, but HIMS is a absolute premium, just monster, and so definitely meets the implied volatility. It meets the percentage range, but from like the conviction side, I haven't done enough research on it to have the pure conviction in it. But from a premium standpoint, it looks juicy.
Yeah, I would have definitely thought it would have been a great candidate a couple of days ago when they were fighting with the FTC. I think they were investigating them. I definitely, ideally, you want to look for a nice red candle, right, to do this, because then you're going to get a little bit more juice out of that lemon.
Like if you go to July 2025 on the $20 put, you can get, it's about $470 a contract. So that's putting you pretty darn close to your percentage.
Right. So if I go over here, this guy right here.
Yep.
That's right at a year out, and you're talking about $20.
$20, yeah.
Yeah, so this is what I don't like about it right there. There's not a lot of liquidity there, so I essentially would be the market.
Hey, TJ, somebody brought up SoundHound, and I've looked at those. Now, it is a much riskier company, but...
So isn't this the one that NVIDIA took a stake in, or no?
Yeah.
Because I feel like I saw that on research that I had done. Or maybe you told me.
Your break even on some of these is going to be pretty crazy.
Right. So you got to look at their balance sheet and stuff to make sure that they have the run rate, right? So I'd look over here in January that way, because whenever the company is a little bit riskier like that, you're better off going with the shorter trade, because there's obviously less chance that they're going to go out of business during that time or file bankruptcy or announce reverse splits and all that stuff. Because when they announce reverse splits when they're under $5, that's always a possibility, because they no longer want to be considered penny stock status from a share price. And a lot of institutions will not invest in something that's under $5 a share. Some institutions won't touch you unless you're at least $10 a share. So those are other little things to consider. So SoundHound, I've actually looked at this one before. It's kind of attractive at $4. And surprisingly to me, there's quite a bit of open interest, and the implied volatility is pretty high. So we run the money on that.
And it's a bit more of a solid
20% return, but it's only for half a year. So that's like the equivalent of about a 39 to 40% return. So now it's like, do some freaking homework and see if it makes sense. So now let's put numbers together and see what the bid ask is, or we're going to lose a lot of money to slippage. And this is what I like about it. You see how tight that is? So you don't have to fight with Mr. Market. You're gonna get a real nice juicy fill there. That's the one thing I don't like about put credit spreads is sometimes I leave the trade on for 3 or 4 hours before it fills. So it's real hard on my patience, if you will. But this one's kind of interesting, right? Because you go 200 contracts. I don't know if this is one of those that it'll let you do it in the middle, or if it's going to make me go to. Yeah, I see the requirement. You see that? Well, let's just do the math on that. you're gonna tie up $400 200 times, so that's 80 grand, and they're going to pay you $16,994 up front in 178 days. So let's just talk about that for a second. In what world, guys, in what world can you tie up $80,000 for 178 days and walk out of that financial institution with a $16,000 or $17,000 check, whatever the premium was? Like, name me something legally that's going to pay you $16,994, quote unquote, in interest on your money, because it's a cash secured put. You haven't bought anything, right? You're just agreeing to buy it. So what are the gimmies and the gotchas? Let's end the segment with that. What are the gimmies and the gotchas of that trade? Because they're paying us 80 cents. So our break even is 320. So the gimmies are giving you a shitload of money. The gotcha is you're dealing with a risky underlying that could potentially go out of business during that time. It's unlikely, but the possibility is there. I don't think it's probable, but anything's possible, right? And also it could really, really tank, and it could be trading at probably $2 a share. It could blow right past your break even. And now you're in a situation where you're scrambling. So you have to really, really believe in SoundHound at those levels. Like, what's their path to profitability? How much money do they have? What is the management saying? Do they have a moat, etc.? Like, you got to dig. You can't just get premium drunk on these things. You can't just be like, oh shit, I'm going to make, what did we say, 40% on my capital, right? On that mathematically. And then just put on the trade and hope for the best. Because then at that point, you might as well go to the casino and bet on black. I think it's like the odds to win are like 48% or whatever when you account for the little 0 and 0, 0. So you got to do some work on these underlyings. That's why I chose the miners, because that's where I had done the majority of the work as far as me being comfortable with my level of research, if you will. And that's why I've done these on SoFi, because I've put in the work. I've listened to probably 40 or 50 SoFi weeklies, you know what I mean? To where all these guys, the Tanners of the world, he was in the chat earlier, they're nerding out about this stuff. So I'm just very, very familiar. And when you become familiar, it gives you a level of comfort, if that makes sense.
Hey, TJ, can I? So I know you're looking for at least 30% annualized, but I don't want to let people feel like they can't do it for less. I mean, there's times where I do it for like 20, 25%, and it's because I have high conviction and I know I can get interest and I can go and make money off of that premium anyway. So if this is your first time doing it, I would actually recommend that you do it on something that you have a higher conviction in, not something like SoundHound, and that maybe 20, 25% if you can get that, annualized, and that's great. I mean, how often does the S&P 500 hit 20, 25% in a year? And then that's only with that trade. It doesn't even count all the compounding that you could have.
Agreed.
I mean, I'm looking at TSLL, and I'm already getting 20% on a $10 put January 2025, especially after it tanking after hours today. Tomorrow, those puts going out to January 2025 are going to be pretty juicy.
I was looking at that.
I looked at those earlier, and the price, again, there's a couple of hard rules. One is you got to be okay potentially owning these shares. You can't just look at the premium, right?
Yep.
And the other thing is that you got to be okay owning them at that price, right? So that's the other part that people forget about the golden rule is you got to want to own those shares. No. You got to want to own them at that price. Don't forget that part. You got to pay for these shares. So I looked at these, and I think it was 873. It was a weird number.
Yeah, 873. It probably has pretty high liquidity going out to 2026.
That is the one that I was looking at, and I wanted to give Optimus Prime and Megatron and all those other humanoids plenty of time. So I was looking at right over here in the January 2026 level. And I was like, well, that's kind of compelling over here at 292. But I was like, let me see, because a lot of times shorter actually gives you more money. So I was like, this one here is very, very compelling in March. And,
There's just no liquidity there. From what I'm seeing, there's no open interest.
Yeah, there's no customers, right?
No one.
So just for math purposes, because it's easier to do the math, 170 days out, January, this one looks pretty compelling. What is the return on that at 873
for the January 2025?
Yeah, I'm trying to eyeball it in my head. So 10% would be $80, give or take. So feels like about 15, feels like about 12%, 13%. You multiply that times 2, so about a 24 to 27% return.
Annualized, yeah.
Is that right, Ben or Bill? Guys that might be better at math than I am right now.
Pretty close.
Yeah, you're in the ballpark.
And at 873, I'm not going to call it a sleep well at night, but it's kind of close. If you believe in what Tesla's got going on, I mean, y'all do realize Tesla just printed like $700 million on energy, right?
So I was gonna bring that up on Garcia's the 2026 one. Is like, that's for me definitely the conviction side of it is there on Tesla and the TSLL play, but the energy side is going to need more quarters to play out. But it's not going to be long before the energy side is printing over $1 billion. They're pushing towards it already, and so like you said, TJ, the little car company is now going to start having crazy revenue in other areas, but it's going to take another 1, 2, 3, shitty earnings calls and Elon popping off before people start to see the numbers that you can't refute.
Right. So I think that we can end with this kind of stuff, and let's just talk a little bit about recap. Backstop trade, you take a company that you really want to own, but you don't, and it's an oversized bet, but it's not an oversized bet all at once. So you put it on, see how it goes. Maybe Tesla moons and you make 40, 50% right away. The reason that the CleanSpark trade got so big, guys, is because CleanSpark went against me initially, and I actually had a live before I had deleted the channel that said when I was putting on the initial trades, I hope this trade actually goes against me so that I can scale it into something bigger. And it went against me. They were underwater substantially. You guys saw that I was only collecting an X amount, and then I got a lot more on the trades after that. So you got to be comfortable with the underlying, especially if it goes against you, because then that's going to be your opportunity to really get those crazy juicy premiums because you're already underwater on that initial bet. So I wouldn't go all crazy right from the jump.
Something to think about too, TJ, going back to your the percentage that you're going to make on that capital. So on the TSLO one for 2026, if you convert that to a spread instead of just the cash secured put, so your concept could be exactly the same. You're just using obviously less capital to do it. If you went 873 put on the short and then 673 put on the long, you're making 54% on your cash.
Yeah, so you go here and then you go this guy. Here is what you're saying, right?
So yeah, 873 and then 673.
There's a huge ass bid ask. So, but if you can get filled, you're talking about is that right?
So the mid that I'm looking at on the spread is showing $1.09. It's the bid is 96, the ask is 122.
So I'm showing
you're on 773, not 673.
Oh, you're wider is what you're saying.
Yeah.
Oh, that's crazy. Okay.
That's a tight spread right there.
So yeah, so you're
that's a 50%. That's a 50% return, but that's also a year and a half.
Yeah, so I think that's where it's one where if obviously there's the conviction, if somebody's willing to tie up that capital to it and they truly believe in it, that's definitely a way to get a larger percentage on lower capital. But, to each their own, no matter what the trade is. So I just think that's a different way to slice it, kind of in a premium intensive but less capital way.
Oh, I stopped talking. I'm interested. Stop looking at it, bro. You don't have to convince me.
But how does NAV erosion work on a long-term play like that? Because I know these aren't really meant to be held long-term.
Right.
That's what I'm curious as far as, because we know how the cash secured put would behave over 3 months if the underlying went up. I don't know how this would behave in the same. I don't really work with spreads really.
I would imagine it's probably one where you're not going to be holding it anywhere near to the expiration, but because it's 2x leveraged, obviously you're going to get much larger moves. So, when you do get that big run up, you're probably going to look to close it out at 30%, 40%, 50%, which, 50% is still 50% return, even at 50% profit, whatever it is. But yeah, I don't know what it would actually end up looking like, if you went all the way to January 2026, I'm not sure.
Well, I think that right here we have a year. This thing hasn't been trading that long, guys. Is that what I'm seeing here?
Yeah, it started on late 2022.
Right. So we just got to look at it from this trough right here. So look at where Tesla was January 6, 2023. You guys help me out?
Yeah, let's see if I can pull it up.
That had to be down in like the 140-ish dip.
Because we have a year, we have 18 months of data here, so we can make those estimations and correlations pretty quickly. If we overlap the charts, huh?
January 6th.
Yeah,
it was $113.
Okay, so this thing's in the hole at 544, and let's look at it now. It's at 1161, and Tesla's at 220 or whatever it is, right?
Yep.
So there's a pretty strong correlation there. So as long as Tesla holds up, and NAV erosion and everything taken into account over here, this thing is mimicking Tesla percentage-wise.
Yep.
Unless I'm not reading it right. There's always that, right? There's always the fact that I can be wrong. But I don't know, man. It's compelling, and it's obviously tied to a very high conviction play, if you will. But if you are talking about a put credit spread, this is, again, if you have a smaller account, I don't condone this, but I would just do it on the actual underlying as well, because it's not going to take nearly the capital either. So I would just look at Tesla. I would let it all play out. Maybe Tesla gets, maybe Tesla goes 200.
It doesn't make any sense to do it on this.
What's up?
I was going to say the same thing. If you're looking to do a put credit spread to tie up less capital, just do it on the underlying. It doesn't make any sense to do it on TSLO. Now,
the only reason I didn't want to say that is because they may not be able to turn it into a cash secured put. So there's that caveat, just to throw it out there. But I wouldn't do it on TSLO. There's no need. I would rather go to Tesla if it's getting its ass kicked, and I'm going to go place my bet in the $180 range or something like that, or maybe even the $200 range. And Elon, you got a year and a half to cook, baby. You know what I'm saying? Like, I don't have to do shit. I ain't worried over here about reverse splits. I ain't worried about NAV erosion. I'm worried about make sure Optimus Prime, Megatron, Megalodon, whatever you want to call this fucking humanoid, might have 3 or 4 names before we're all said and done. Make sure you deliver him working in the factory, and give me some version of the robo-taxi, and give me FSD to like 98% or whatever it is. Like, that's the bet, and give me some consistency and energy, essentially, right? Because y'all know that Tesla's kind of getting a nice little pass right now on not delivering so many cars, right? That's kind of cool. They didn't even really talk about that. Like, hey, y'all aren't selling as many cars. Like, they're getting a pass because he's selling this AI robotics narrative. So anyway, this would be probably very, very compelling for me, would be to look at this bad boy here, same time frame, give Elon time to figure it out. Maybe he'll be more optimistic on another earnings call. He looked sleepy today, or I don't know if he was in the gutter with that Jordan Peterson interview.
It got him down.
And give them a little over a year to cook, something like September, something like that. Man, this is going to be probably nice. And I'd probably just go right a nice round number at 200. I'd probably go over here and I'd probably widen the spread a little bit to get a bigger return, and I'd probably go 190. And now you're talking about 39% return, right? Call it 35 to 45, depending on where you can get filled. That's pretty damn sexy, man. It's pretty sexy. I could see me going crazy and doing more contracts than I need. But yeah, that's the thing with spreads is caveat emptor, right? You got to buyer beware, because if you're just cash grabbing on put credit spreads and you do not have the capital, then you just have to be able to accept that loss. The cool thing is it's a defined risk strategy, so you know exactly how much you're going to lose. Anyway, y'all want to go through any of these questions, guys, through the chat? If y'all can do me a favor and let's try to answer them real quickly, live Q&A, and knock it out as fast as we can.
There was one earlier. I don't know if you're gonna go that far back. Megan was asking.
I'm going to the very beginning, dude. That way we can knock these out as best as we can. Holy cow, there's a lot of comments today. Okay. So this guy, Christian Soto, does the OG level function if you're a little newer to wheeling in options? I don't really know what he's talking about. If he's talking about the membership level, or is he talking about like the tracker? I don't understand.
Yeah, I think the membership level.
I mean, I'll talk to anybody, but I think that I would recommend like doing like homework on your own and stuff, and learn a lot of this stuff on your own at no charge before you take on like FaceTimes. I think that it might be unnecessary initially. Anything else? Let's see if I can find any. You guys can scour these as well, so that we can try to get some of these questions answered.
Bill, I think you were bringing up the one that Megan asked. She was curious on what the dollar number was.
Yeah, I mean, I'm not going to give my number, but I would say if you have $1 million, I think you can, like fall asleep for most of the year and make 150.
Yeah, and KRM is asking, how often do you guys sell cash secured puts where the strike is higher than the current stock price for a weekly, monthly range? For me personally, I never do it, just because I'm usually selling cash secured puts as a cash grab. So I don't want to be sitting right in front of the steamroller every single week, every single month, hoping that the stock is going to be above that strike. So I usually never do. I'm usually out of the money on the cash secured puts.
Yeah, on the short dated ones, I wouldn't do that.
Yeah.
Yeah, me neither. I have done cash secured puts in the money on SoFi at $10 in 2023. And I did some in the money on Palantir. And I took ownership of those shares at $10. And I took ownership of Palantir. I think it was at $9.50. And I remember specifically Mr. Premium of the option, like, why aren't you rolling that one? And I was like, I just think it's going to go up. And that's how I got those shares. This was on my wife's account. And it worked out, but it didn't feel good when I was taking assignment. Like he just did. So, just full disclaimers here, dude. This shit, when you get put shares on a backstop, like you're pretty quick to forget all the premium they paid you up front, because you already did a bunch of other shit with it. You know what I mean? So it's not like you have the money sitting there allocated in the Palantir piggy bank or anything like that. So just keep that in mind whenever you get assigned shares trading at like $6 or $7, like Palantir was, and I'm over here buying them at $9.50. I was feeling like a little bit of a tool when it happened. It all worked out in the end, but I'm just saying, when I got put on these shares of SoFi, I think SoFi was like at $4 or $5 when that happened. And I was like, ugh, because I think this might have been not 23. I think this might have been 22. And it was just like, oh, it was painful. Dude, so it happened as well. Let me see if I can keep it going. George, sorry, I don't fully understand your backstop strategy. Can you explain it further? I feel like I've talked about it enough. Can
Yeah, I think
Bill
that was back when you.
guys
I
give a
think
rundown
that
on
you
it?
did.
Yeah, that was right at the start.
Yeah,
Okay.
like you had actually you reiterated you went over the backstop trade I think twice after the question. So,
There was one on here that I think for if there's newer people kind of to it that might actually be helpful for them to know. Mitch asked, in the case of liquidity, isn't low liquidity not terrible for us sellers of options if you can fill the sell order? So I think to clear up for some people why liquidity is a big deal even when you are selling the option.
I like liquidity because I want to be able to exit the trade.
Yeah.
If you are the market, who's gonna, I mean, I know that the broker is supposed to go to bat for you and find somebody. But if there's like not a lot of open interest there, and you're going to the club that's only got 2 girls and they already left home with another guy, like, what are you still doing there? I'm just saying, you're at the wrong club, bro. Go to a different bar. Go to ladies' night, right? I don't want to be the only open interest in that, and that's just me. I don't want to go to that dance hall. So everybody's got to do their own
I've been
thing,
there
right?
before where I would start trying to close the trade, and every time I closed it, the price got worse, and then I closed the next one, it got worse, and by the time I got out, I already gave back so much I never did it again. So now I have it as like a default on Robinhood is open interest and liquidity and open interest, so that way I don't have to run into that again.
Yeah, I definitely did not pay for the PowerX optimizer. That's something that guy Marcus sells, and I want to say that it's probably like $2,000 or something absolutely ridiculous. It's like a screener and shit for the wheel strategy. It's crazy. So let me see if I see anything else here.
Because I think overall to the chat, they were answering the questions as well. They were kind of like.
But does anybody else have a number on what it would take to retire?
I do, but everybody would laugh at my number.
What is it?
Well, I mean, it's your number.
If I had $500,000 in an account right now, I would absolutely hang it up from what I do, because we live very, very low. Even for California, we live very low under our means. But that to me would be the number where I would be comfortable and confident knowing I can make enough to cover, anything emergency and cover our living expenses, still live comfortably like we do. And, to me, it would be worth walking away from everything else.
Yeah, for me, it's 1 million. I think it's more of a psychological number for me. But I'm pretty sure I could get, I'm pretty sure like in the 500, 700 range, I think I could start covering basically all of the bills and, saving for retirement and everything else still, while keeping that, and something too, my wife recently brought up that I was pretty proud of her was, so I recently bought a used truck. And we paid for it cash, and we had the money in the bank, so we paid for it. But one thing I did bring up, I said, hey, if you don't want to see the savings kind of go down by that much, we could pull a little bit from the account to cover that. And then she said, I think it's better if we leave it there so that way we let the compounding kind of work. And I was just, that got me so excited to hear from her, is to let the money tree keep growing, like not, instead of cutting the branches off early. That for me, that, it feels good to know that, we're on the exact same page when it comes to all this. So it's a pretty good
You
truck.
you always see in the chat that Mr. Premium is talking about a stinker. Yeah. That's an Uncle Bruce terminology. He calls them stink bids on his channel, the older gentleman that was talking about how you can retire with like $10,000 doing put credit spreads on Tesla or whatever. But I mean, the dude knows how to sell options. But so a stinker is asking a ridiculous bid or ask and waiting for it to trigger. So it's like, and he has like specific numbers. Like he sent them to me one time. I don't remember what the numbers are, but they end in like certain digits. Maybe if he's still on, if he could put it in the chat, like the actual numbers, like for a stink bid, but essentially like let's say the bid ask is 25, 27 cents. You'll be like, well, I'll do it, but at like 36 cents or whatever the hell the number is. It's like way more than what it's doing. And then all of a sudden it tanks and it goes to your level and it triggers it. So it's kind of like a limit order almost on a cash secured put. And before you know it, it gets filled. SoundHound is garbage. It could be, man. It could be. They have a lot of patents. They have a lot of patents. So we'll see.
It's not as much garbage as he thinks.
Targeting a premium, nothing personal. It's just business. Low liquidity is bad because you need a buyer at the end of the sale. We already talked about this one, right? Mm-hmm. Okay. Yeah, so he's talking about like the first rule of a cash secured put is it's two things. If you want to own it, but don't forget, it's do you want to own it at that price? That's the thing, you know. I want to own Tesla. I don't want to own it at 414. You know what I mean? I want to own it, but I want to have already bought it. You know what I mean? I'm okay owning it at 414. I ain't trying to buy it at 414. There's a big difference there. So this person is saying that if the goal is to have the contract expire, hence that makes sense. If you're just going to set it and forget it and let the chips fall where they may, then as long as you can get the contract filled, your objective has been achieved, right? So I don't think there's anything wrong with that. That's the thing. I don't know what they're talking about Lysol here. Miners always make me money. Agreed. I don't know how long that's going to be, man. I mean, at some point, doesn't a business need to become profitable? And I still can't figure that part out. Ben, you're in the miners, right? CleanSpark's like your baby.
CleanSpark's the only one that I'll touch. I learned the hard way. I know you're making a lot on Riot with those cash secure puts, but I learned the hard way on Riot not to deal with anything other than CleanSpark.
Can we end on a comment on the miners for a second? Like, I understand there's better miners than others. I get the whole thing. But guys, like, after the halving, if Bitcoin doesn't go up, these companies are going to lose a lot of money. And if Bitcoin goes down, the write-up in the value of their HODL that they just wrote up and made a profit on last quarter will reverse and go the opposite way. I just want to state that if Bitcoin doesn't go up, eventually these miners are not going to be worth anything.
So
very little.
I think you're 100% right with that, Bill. I would ask a question, just kind of play devil's advocate, is like, just from the sheer economic standpoint of the supply demand, what in your mind, what would you say the odds are that Bitcoin, and I'm not saying like these $1 million, $10 million, $50 million targets that people talk about. What are the odds that we don't see $100,000, $150,000 Bitcoin?
I expected it to get there, even though, I mean, I have my own opinions on Bitcoin, but I expected it to get there just based on a lot of people and like funds stepping in and creating a lot of buying around it, and it hasn't happened. So I don't know.
Do you think it still does at some point?
I don't know. I'm not seeing the as much demand as I thought I would.
See, this, like that exact reason of what you talked about. That's why for me, like I'm 100% okay with in and out weeklies on CleanSpark, and like I'll cut them loose at any point in time, because I kind of went into it expecting the volatility is volatility, but the underlying, like we talked about, is obviously the most important part. Well, obviously the miners, the underlying is Bitcoin.
Yeah.
So if whether it's federal regulation or, you know, whatever, like obviously, yeah, that could take a huge dip. So for me, I don't mind taking a gamble on it, taking a risk on it in terms of bringing that in to get the premium and make the money. But I want to be able to get out quick if something.
And I've done it. I've done it too. I've done like the trade that TJ was showing on CleanSpark. I followed him into that trade.
Yeah.
I've done it. I'm just saying that if you're making half the Bitcoin that you were in roughly the same efficiency, you will be making less money if Bitcoin doesn't go up, because you're bringing in half the amount of Bitcoin. You know, it's
and I think for me, the CleanSpark is just a lot more of a sympathy sentiment to Bitcoin, just because I don't have the ability to be buying 2, 3, 4, 5 Bitcoin to, you know, see what happens with that. So that's really my way to kind of be a part of it.
Yeah.
What do y'all say about this comment right here? Because I was going to bring it up, but this dude's always on top of the miners, bro. Like anything Bitcoin related, this dude knows. Mark, my man. BlackRock just bought 40 times the daily production of Bitcoin this past weekend. If that isn't bullish, what is? And then didn't Larry Fink, is that his name? Did I butcher it? The CEO of BlackRock? Didn't he just say that Bitcoin's like quote unquote legitimate? Or
They make
something to
money.
that effect?
They make money on and buying it and selling it to other people.
All right.
They're making money on the spreads.
That's what I'm saying. But I'm saying that's part of my bull thesis. Is I think that there's so many institutions making money with having these little crypto addresses going from pinging to pinging, from address to address. They don't want that asset class to go away anytime soon.
Oh, I think it's a great trading asset.
Yeah.
But I'm just saying from the perspective of the miners, if Bitcoin's price doesn't go up, they're going to have negative cash flow. There's no way around it.
Well, unless they figure out, I mean, the main thing is just the energy costs. Unless they figure out how to be completely independent, and self-sustainable on that side of it, the energy costs will just deplete, so much of that.
We're going to be in Miami tomorrow at midnight. Layover, 8 hours or 10, I think. I was like, anybody want to meet up at 2 a.m? No. Anyway,
yeah, Ben, and for all I know, Bitcoin can just go up, and I could be wrong, but I'm just saying, if Bitcoin doesn't go up, the miners are going to be in a world of hurt.
Yeah.
Agreed, but Bitcoin can't exist without the miners. So that's also another bet that I have on the miners. Because how does this thing work without the miners? Can anybody riddle me that?
I don't even know how it works, period. So I have
No, but I'm just saying, like, you gotta mine the Bitcoin, right? Because that's how Bitcoin is generated, I guess, is like those are the rewards, right? The little Satoshis or whatever the hell. I've watched some technical videos on it. I still can't wrap my mind around it, but I know how to make money off the miners.
I think at the end of the day, it probably comes down to last man standing. As each halving goes on and they're harder and harder to come by and mine, who's going to be the most efficient, who's going to be able to mine the most at the lowest cost, because eventually you're not going to have 40 miners mining, 1/4 of a Bitcoin every day. Like eventually it's going to have to be less hands in the pot trying to do it. So picking the winning horse is obviously tough, but
it'll eventually, if they build out the platform, you'll get a portion of the transactions.
Yeah.
It's not, at some point, it's no longer mining. It's just the processing the transactions.
Well, that's where you get other miners like Iron, where they're trying to be a little more obviously on like the AI side of things. And I think these companies are going to have to find a way to diversify the revenue stream just to add something to it, because eventually you're going to have to.
And I know it's time to go. I actually have to go too, but maybe for the next Wheelers, I'd like someone to explain to me if the mining, like the actual units themselves, are usable for anything else. I mean, is there some sort of security blanket in the miners? Like, can you use the equipment to actually do AI or do computing or whatever else? I have no idea. Can they just be used for Bitcoin and maybe other cryptocurrency mining, or are they actually usable for something?
You can. I don't have like the answers or information on that. One of the guys I work with, he's a huge like computer guy, gamer, builds computers, GPUs, like he knows all that kind of stuff. It's funny, I asked him that same exact question, because I was like, if Bitcoin, what if the apocalypse happened? I was like, all these millions of dollars of equipment, what do you do? He's like, oh, it just gets repurposed to whether it's gaming, whether it's video cards, whether it's, anything else. He said it is usable and it is actually,
that's good to know, because we will need more compute power eventually.
Yeah. The sheriff is in town, guys. She just did this little. Anyway, I want to end with this, guys. This is the Fab Five. I'm going to go over here to the portfolio for a second. That's the Fab Five right now. SoFi, Tesla, PayPal, Palantir, and Riot. That's the Fab Five. And here's the equity. feel very, very bullish on all of these. The order is going to change. I think Tesla's going to end up at the top, and Palantir is going to be real close to it. And then it's going to be PayPal, SoFi, and Riot. But then now I have these others that are essentially glorified swing trades, if you will. But I would eventually like to end up with 8 investments. These are what I call my investments, these 5. And then now I've got 1, 2, 3, 4, 5, 6, 7, 8 trades. Of those 8 trades, if you needed to turn 3 of those into an investment so that I could end up with the elite 8, if you will, or the great 8. I like 8 because it's the number of infinity, because this is an endless game, if you will. Which of those 8 could you turn in to graduate them from trade to investment? If you guys could help me out with that. We've got 1, 2, 3, 4, 5, 6, 7 to choose from, or 8 to choose from, and I need to keep 3 and turn them into this level of investment. So let's just go in order. We'll start with Garcia, and then we'll go down the road.
Let's see. I was gonna say.
Let me put them up here for you, right here.
Yeah. So MicroStrategy, just as the. Well, I mean, you're already into Bitcoin so much, so actually, I think that would be a little too much. So I'm thinking Celsius, Nvidia, and possibly CrowdStrike if they don't go out of business with all these potential lawsuits. So I guess depending on how they weather these next couple of months, and if it their future earnings don't get affected too much, I mean, I think it would just continue moving up. As long as Nancy Pelosi doesn't sell her CrowdStrike stake, I think it should be fine.
Bill White. Those are the trades. I'm
Nvidia,
looking to graduate 3 of those bad boys to investments. There's a couple of that are also I put credit spreads on. I have Amazon put credit spread. I got Meta put credit spread, and I think the other one's Elf put credit spreads, and then the other put credit spreads on PayPal. PayPal is already one of them, so that doesn't count. So we can use the put credit spreads as well as something that could potentially graduate, turn into one of these investments.
Well, if that's the case, Amazon, Nvidia, if it drops more, CrowdStrike, depending on how much it goes down and what, once this starts again, all this big mess gets cleared up.
Yeah. So what I'm going to do is I'm going to put this on total return so that you guys can see where I'm at with these right now. So here we go. So I'm actually up on Intel. We're up on Opendoor. Very surprising, right? We're even on Path, and everything else we're down, because anytime I'm building a position, guys, if I don't go down in that position doesn't get bigger. I have a very, very hard time averaging up on a position when I'm first starting it out. That's just me. That's just the way that it is, right? So what about you, Ben?
I definitely would say Nvidia for sure. Celsius is an interesting one because it's been like 15 years since I've had a soda or an energy drink. Coffee is my only caffeine, but people are not going to stop drinking energy drinks. They're not going to stop consuming, products like that, whether it's marketed as a fitness aid or, whatever it is. I do think Pepsi is probably going to end up taking a larger stake in them. So that would be one I think that's going to eventually rebound and recover. And then CrowdStrike too, just because everything is going to be digital. So cybersecurity is going to get more and more and more important. So, the snafu the other day was wild, but I think that also showed just how large they really are. I didn't know it until that happened. So is it bad? Absolutely. It's kind of a black eye, but I think they'll recover from it.
Awesome. So let me tell you all the ones that I'm eyeballing to graduate them to an investment. I'm looking at graduating Intel to an investment because I just think that it's just a much better entry point than NVIDIA is for me. And I've already got a pretty substantial position that I'm winning on, and it's kind of like the PayPal of the semiconductor space. It's very, very easy to wheel at these levels. So that's the one that I'm really strongly considering, because I can see a world where Intel is $50 per share again. And in the not too distant future, I'm talking 12 to 18 months. So it meets those parameters. So I wouldn't mind having 7,500 shares of Intel, possibly even 10,000, if I can stay in this $30 range, because I just feel like I can manufacture the win there. And, you know, if it goes from, you know, if it's 10,000 shares, 300,000 to 500,000, that makes a pretty substantial dent in the portfolio. And it's kind of sleep well at night, because I don't think Intel's going out of business in my lifetime. That's just how I feel, right? So then the other one, if the opportunity presents itself, is Celsius. I don't think that people are gonna, it's like coffee, dude. I think they're always going to drink energy drinks. Now there's a fad associated with energy drinks, like, you know, Red Bull was the craze, Monster was the craze. There was one called Bang that I used to drink when I'd go to the gyms. So there's been a handful of these that like get real hot for a while. So a lot of them don't have a lot of staying power, if you will. If Celsius can demonstrate to me that it's going to have legitimate staying power, and if I could build a position in the low 40s, right now I just started this position at 48.32, but I do have the 25 puts at 45, and then we're strangling the stock a little bit by selling cover calls at 10. So the premiums are really, really good. So it meets that parameter. It was at $99 not too long ago. So it's shown me that it can go parabolic. So I see a world where if they fix the reputation, maybe come out with less harmful drinks or whatever, fix the marketing and the narrative a little bit, I could see a world where they would be trading at like $60, $70, $80 a share again. So it meets that parameter, and the premiums are really, really good. And if I could get my desired entry, which is going to be in the high 30s or right at $40, then I could see how this one could easily become, you know, anywhere from 5,000 to 10,000 share holding, because I see a way to manufacture the win. And then the other one that's on this list, put credit spreads aside, is by far and away CrowdStrike. Like by far and away, this is the one that I'm most interested in, because it's the space that I happen to be the most interested in. But I'm going to continue to try to scale NVIDIA into a larger position as well, but only if it gives me a decent entry point. I mean, right now we're still at all-time high levels in the vicinity. Like, it's not like NVIDIA has crashed or anything, you know? Mm-hmm. So I think if this guy can get to somehow the low 200s, because it wasn't that long ago, guys, that it was down here at these levels.
Hey, TJ, I got to run. My computer's going to die on me here any second.
So that's the last one that I would really try to turn on. But anyway, guys, I got to get rocking and rolling. I don't want to get in trouble at home. We're heading over to the Caribbean tomorrow. I may be able to go live in the morning. I'm not sure yet. I'll hold my feet to the fire on that one. But anyway, guys, I appreciate each and every one of you guys. Follow Garcia on YouTube. Ben's on X. Bill's also on X as well, but he doesn't really do too much on there.
Well, let me know if people want me to post trades. I mean, I've never even tried to do anything like that, but if people would actually follow me and want to see my trades, I'll do it. But I just no one ever actually requested to follow me, so I don't even bother. Right?
I think now that they know that you're in a position to retire at 43 or 44, Bill. That gives you a little more street cred.
Maybe a little bit.
Anyway, guys, I got to get rocking and rolling. I appreciate you guys, man. I always learn a lot whenever you guys are on the channel. And Garcia, bro, I'm still waiting on an invite to go on your channel.
Yeah, we'll make it happen when you come back after vacation.
Sounds good, brother. TJ the Wheel Deal signing off. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.
Bye, guys.